Okay, let's go ahead and begin. Just want to say thanks to everybody for coming in and joining us today. My name's Esther Beatty, and I'm the broker and owner of A Choice Home Mortgage, along with my husband, Greg. And I've been in the industry for 10 years. I started off as a realtor, first in Texas and then in Florida, and I'm a broker here in California. We do loans and financing in over 43 states, and we have over 140 plus five-star reviews. But not so much about me. I want to be more here for you guys in terms of marketing. As an agent, it's very important to understand unique products and offerings that present yourself and make you stand apart. And so that's my goal in helping all of you. As an agent, there's a lot of realtors, as you know, that are out there wanting to help buyers with selling or to help clients sell and buy. A lot of the marketing that they do is all the same. So it's important for you to stand out, and that's what I'm hoping to help you do as well. So a couple things. Obviously, you want to make money. I want to make money. So if you want to make money and learn about new unique products, that's my goal in doing these webinars for you. So if you're interested in that, put a yes in the chat, and let's make some money and grow together. Couple housekeeping things. Want to keep it on a mute for now, and then we're going to open up and conversate and talk about scenarios as well, so that we can answer any of your questions. And I have a co-host here with me today. Her name is Brooke McManus, and she is my account rep with Longbridge Financial, which is one of the top reverse mortgage lenders in the country. We've been working together for several years now, and she's a great resource and tool as well. Brooke, you want to say hi?
I was on mute. Hi, everyone. Great to be here.
Awesome. So what is unique and fun is learning that actually you can do a reverse mortgage for purchase. That was not always an offering by the reverse mortgage industry, and there's been a lot of great changes that have occurred. And so that is what we are going to be reviewing today. All right, so let me share my screen with you guys, and we will get right to it. All right, here we go. All right. So we are going to be reviewing the reverse mortgage for purchase. This is going to help you capture more sales in your market for the 55 and up community. You can do it both with an FHA loan and a proprietary, which is basically a jumbo. And we will start here. I already kind of gave you a little bit of a rundown. This is Greg and I. We are the owners of Choice Home Mortgage. We're a family-run business, recognized as one of the top 100 brokers in the nation. We've got an A+ rating from the BBB with over 140 plus five-star reviews just received in the last 3 years. We pride ourselves on customer service, quick turn times, low rates, of course, and the ability to fund loans when others can't. So we always look for solutions. And we are going to go ahead and start. Brooke and I will be co-hosting this, and we're going to be reviewing certain things today about myths that you've heard with reverse mortgages, statistics, the different types of qualifications, and we'll talk about scenarios and how the benefits that can meet for certain borrowers and maybe any challenges to help you get some more listings and also serve your clients to the best that you can. So, Brooke, you want to go ahead and talk about the myths and misconceptions of reverse mortgage?
Yes, I will. Thank you, Esther. So one of the biggest things that comes up when talking to borrowers, brokers, loan officers, realtors, financial advisors, CPAs, everyone, it's always something negative about reverse mortgages. So if you can type in the chat, maybe just some of the negative things that you have heard or have come up against when it comes to reverse. I think this is a super critical topic to at least start to diffuse what the misconceptions are and what's fact and what's myth. I'll maybe wait for a few of the chat box, but we can kind of just dive into it. One of the first, I would say the most common myth that we hear is the bank owns my home. A lot of these borrowers are very hesitant about getting in reverse because of this misconception, or maybe it has happened in the very a long time ago where there was a situation where one of the borrowers were not on title, and once the spouse passed away, the bank then did take over the home. So that's, I think, where this misconception has come from. So really important to understand that the borrowers stay on title, right? Just like a forward loan. So maybe a mortgage that you currently have or that you've been a part of, you stay on title. Now, do you own your home? Well, if there's a lien on title, no, actually the bank owns it. So very similar to a reverse. However, borrowers stay on title, and also we can close in a trust. So a lot of these borrowers that we work with, the home is actually in a trust. And as long as we get that reviewed by our attorney, we can move forward and close in the trust. This is great. They will take my home and there'll be nothing left for my kids. I hear that all the time. Expenses and or consequences for kids after the reverse borrower dies. Okay, these are great. So next myth that comes up is, now that the borrowers pass away, what's in it for the inheritance for the kids? One of the biggest criteria of a reverse mortgage is the loan to value. So you guys are familiar with LTV, loan to value. In reverse, we call it the PL factor, the principal limit factor. So the LTV in a reverse mortgage is typically, or I shouldn't say this, it's based on age of the youngest borrower, the value of the home, and current rates. For example, today, a 62-year-old would qualify for roughly around 34% LTV. An 80-year-old would qualify for roughly around 47% LTV. So I want you to think about that. Typically in a forward mortgage, the bank is typically lending, would you agree, maybe 80%, 90% of the loan? Roughly around that amount?
Typically.
We're only lending 34 to 47%. So there's a lot of equity left over in these homes, right? We're not lending all of the value of the home. So to help understand, to help the kids understand that there most likely will be something left over for the kids. And I think it's always, it's having that conversation of what is the benefit of the reverse for the borrowers, right? For the parents that actually need this loan. One of the biggest benefits of a reverse mortgage, there is no mortgage payment required. I'll say that again, there's no mortgage payment required. So if you think about an average mortgage payment, probably around $2,200 to $2,500, depending on the area that you're in. Probably way more if you're in California in those areas, right? But let's just call it $2,000 to $2,500. If you can eliminate a mortgage payment every single month for a borrower that's on a fixed income, what can that do to help their life? What can that do to help offset the rising cost of medical bills, credit card bills, inflation? Yeah. So when you get into that conversation with the kids about what's in it, what's going to be left for me, you have to kind of redirect the conversation of what is going to benefit the borrowers today to help them live their best life. And then, we can talk about what's in it for them. But those are great. Those are great challenges that come up. And I think it's really important that you know how to navigate them. Any questions? Next slide.
Okay. All right, so let's talk about some statistics. We did kind of run a little bit of statistics that you had earlier, Brooke. So every day there's close to 10,000 people turning 65, and they hold a majority of the equity in America, averaging about 12 trillion right now. But reverse mortgages in general, out of all the loans that are done in the United States, only account for 2 to 3% of the entire market. So there is a huge need and a growing need, obviously, because we have more and more seniors becoming seniors and into retirement every single year and day. So this is a great means to an end, or to meet their goal in retirement and elongate that. So we'll move to the next slide.
And just to, piggyback on that, what a great opportunity. What a great opportunity to focus on the senior population. I mean, if 2 to 3% of the United States population of seniors have a reverse, to me, that's like eyes wide open, and like, what a great opportunity to start focusing and honing in on the rest of the seniors that have a mortgage that are not in a reverse.
It's also an untapped market, because in Europe, I think I don't know what the exact statistic is, but the percentages of loans in Europe, for instance, are, I think, like close to like 30 to 40%.
40%.
So, us being in the United States, it's only 3 to 4. There's a lot of opportunities, to help them and downsize or upsize depending upon what they're trying to do. You want to talk about the trends of the age of the home buyers, Brooke?
Yeah, I mean, I think this is just a really cool graph to see, once again, the opportunity there. So, looking at the age groups, you see the Gen Xers have 24% market share. Young boomers are coming in right behind them. And then, you've got the 68 to 76-year-olds that's got 16% of the market share. So, to me, that's just showing that there is a lot of potential there. And as a realtor, what I would do is I would go to my database and, look at the age demographic of who I have marketed to, who I've helped sell a house to, who I've helped buy a house for, and start to look at those categories and start to, separate them and really focus on this opportunity.
Yep. Let's go.
Next slide.
All right, so we're going to talk about a couple scenarios, just to give you an idea about how using a reverse mortgage for purchase can help someone's retirement. The average Social Security income in the US, by the way, is $1,778 per month. And a lot of retirees only have Social Security income or possibly a pension. So I've had instances where I've had a couple, for instance, they had a joint income, husband passed away, wife is left in the home. They may even have a free and clear home, but with the no longer having the husband's income, she's only on Social Security income. Maybe she's able to get the pension from the husband, or maybe not, but her income per month just shrunk by quite a bit. So I have these conversations. Sometimes a reverse mortgage for them to be able to stay in age in place works. Sometimes they need to downsize and not have to deal with the maintenance of the larger home that they're living in. So you want to present the Mr. and Mrs. Wilson scenario, Brooke?
Yeah. So, this is what I see all day long. Our purchase volume has increased the last year and a half. I think
Mhm.
more awareness of reverse for purchase is getting out there. I've done quite a few presentations in Houston, California, here in Colorado. And I think the more and more people get an understanding of what this HECM for purchase can do, the more volume we're going to do. We see it a lot where, one or two borrowers, they're on fixed income, like Esther was saying. Again, you see the $1,700 a month, maybe even $2,200 a month that they're on fixed income. And they need to right size to a different home. We see a lot of it where they want to move closer to their grandchildren. They want to move out of state because they can't afford where they're currently living anymore. They want to move into a smaller home, maybe a condo where there aren't, all the home maintenance expenses. So in this particular situation, we've got a 65 and a 67-year-old, and they want to move closer to their grandkids. They have a home, it's worth $500,000. So they're hoping to find another home within that same price range, $500,000. So they want to try to preserve as much liquidity for their retirement. So in their mind, they're like, we don't want to put a full cash offer down because we want to be able to save at least some of our investment, our the sale from our house for retirement proceeds. Go ahead and to the next screen.
Yes.
So traditional purchase, right? They've got proceeds from their current home, $500,000. They want to buy another home that's $500,000. First option, all cash, right? They put $500,000 down. They've got zero mortgage payment, but then they have nothing left over. How many of you have seen this situation or have been in this situation? I'm sure you've seen these all cash offers. HECM for purchase. So again, remember, they want a little bit of liquidity left over. So proceeds from the current home is $500,000. Purchase price of the new house is $500,000. On a HECM for purchase, the borrower would have to put down roughly $319,000. The reverse lien, we would lend 40%. Remember, we talked about this 40% to 60% LTV, depending on the borrower's age. We would lend that much, between 40 to 60 or 37 to 47. And then the borrower would have to come in with that 60%. No monthly mortgage payment required. And the borrowers get to hold on to $180,000 from the proceeds of their home.
And just to add, this is a very huge game changer. I recently had a client did the exact same thing, moved from Washington down to California to a 55 and up community for a better life. And she took I think she ended up selling for close to $1 million or so, bought, like a $450,000 home. Instead of buying it all in cash, which she was concerned that if she spent all of that, what did she have left over? And all she has is a social security income, which, by the way, guys, residual income on reverse mortgages kind of works like VA income calculation. So most of the time, social security income is really all that they need to qualify, which is huge, because on a forward mortgage, as you know, you have to have income that meets a DTI requirement and all of that. This doesn't have that same strict guideline. So it really helps seniors that have fixed income that can only afford certain things. But back to this situation, what it allowed her to do, instead of spending all the money in cash and only having a certain portion left over, she was able to diversify. So she wanted to also have a goal of starting a small business as a notary down in this new community that she moved to. She's able to also deal with the inflation issues because she's able to not have a mortgage payment, so she can afford to eat, she can go, hang out with friends and still enjoy a good retirement life. So that's just something I wanted to mention. So on that scenario, we want to talk about a different scenario as well.
Any questions on that really quick? Does anybody
yeah.
have any questions on that liquidity scenario? You can type it in the chat, or if you want to raise your hand, maybe we can see to unmute. If anybody has any questions. Okay. All right, we'll get on to this one. So this is a line of credit scenario. So we have a couple different reverse products. One of our most popular products is a HECM, which is a variable, and it has a line of credit option, which means if we were doing a refi and the borrower had, let's say, $100,000 of proceeds available, they can opt to maybe take 50,000 cash at closing and then put the rest on the line of credit. Line of credit is very similar to a HELOC, right? But again, there's no mortgage payment required. So it's just money sitting in the line of credit reserves, and they can draw from it whenever they want. They can take 5,000, 10,000, 2,000, whatever they want. The line of credit has a growth feature. This is one of the huge benefits of a reverse mortgage. The line of credit growth rate is the same as the effective initial rate. So right now on a typical reverse mortgage, our rates are around 6.8 to 7.2. I think it's very similar to what the forward side is. Okay, so we're right around there, same. So any money left in the line of credit will grow at a rate of 6.8 to 7.2%. Does anybody know any other thing out there paying that much on your money? Anybody? Yeah.
Most savings accounts do not. And that's another thing that if you do a reverse for purchase, it's a huge benefit. When you take that big chunk that you have left over, you can also overfund a line of credit. And that's what one of my clients did a lot do actually, because it's paying you close to 8% on your money that's sitting there that you can access at any point in time for emergency, new roof, situations that may arise for medical expenses. It's always there and it's non-taxable.
Right. So real quick, so in this example, you're saying that if they took out 50,000 to use on whatever, and then they had a line of credit at 50,000, they're going to be making between 6.8 and 7.2% interest on that 50,000 that they're not touching?
Yes. It sits there and it grows for the life of both borrowers. So no matter what happens, it's insured by the government. So it stays in place for the remainder of both of their lives and protects both of them.
Yeah, I have one other question on the other slide that we did. So what happens to
that one here?
Yeah, what happens to the home? So you're not making a mortgage payment on it, but what happens to it?
So the home that they have that they're purchasing on this scenario, is that what you mean? Or the one that they sell?
The one that I guess I'm lost on what happens with the one that's being sold with the reverse mortgage.
The way this works is basically you would get two transactions out of the deal, right? So you list their home, you sell their home. Then they're going to go and buy a new home, right? So you're going to represent them on that side of it. On the purchase, instead of the loan being a forward loan, like a conventional mortgage, it would be a reverse mortgage loan. But it's better than necessarily doing it all cash is what this example was basically.
Okay, so it's pardon me for not understanding this. This is new to me. So it's a reverse mortgage loan on the new property.
Yep.
Okay, got it.
And it would be, we could do a concurrent close, right? So they would close on their departing home. We would get a CD showing that it's closed. And then the proceeds from that departure home, we would then apply to the reverse mortgage new purchase home.
Okay.
Yeah.
And you also, we still, just to add, we still do like a pre-approval as well. So all things considered, just like a regular forward that you're used to, it's the same type of situation. You would have a pre-approval letter. Say I'm the lender, I call the other agent, I do the same phone call, and there's actually more skin in the game than somebody putting like 20% down or 10% down, because they're really putting a down payment of close to 60%. So it's something strong to consider for the selling agent or the listing agent on the other side.
Great question.
Yes, great question. Yes. Okay, so you want to continue on this line of credit one? I don't think we were finished yet.
Yeah, so basically this one is saying, you know, they've got they want to purchase a $600,000 home. Their proceeds are $450,000. In this particular case, they qualify for $241,000. So us, the bank, is going to lend them $241,000. They're going to come in with $381,000, the difference of that $600,000 house. They've got an extra $41,000 left over. So if you do the math from that 600 to, or the 241 and the 381, they've got that 41,000 left over. Now they can take that 41,000 and go do home improvements. They can pay off credit cards. They could go on a vacation. They could, right? They can take that 41,000 and go and do whatever they want. In this case, they want to capitalize on the line of credit growth rate of 6.8 to 7.2%. So they're going to take that 41,000 and fund their line of credit. So at closing, there will be an additional 41,000 on top of what they're required to put in for the $600,000 home. And that will go into the line of credit account. And now that is going to have a growth rate of the 6.8 to 7.2%.
And just to reiterate too, on the line of credit, they can access those funds at any point in time that they want. All they have to do is call the servicer that services their loan and ask for a draw.
That's a great question. What is the max line of credit? There really is not.
There's not.
I mean, you can put in as much as you want into the line of credit.
Are the interest rates when you're purchasing when you're using the reverse mortgage for the new purchase home, are the interest rates the same as a like a regular mortgage? Are they in the same alignment?
Yeah, right now we're looking at 6.8 to 7.2%.
Okay.
Yeah.
I know you said it for the line of credit scenario that's what they would make, but I wasn't sure on the actual purchase if you straight up purchased it.
Yeah, so the growth rate is going to be the same as the effective initial rate or the current rate. So 6.8 to 7.2. Mm-hmm.
Now it's a little bit different, just a heads up on jumbo. They are a little bit higher on the rates, but the closing costs are cheaper.
Yeah.
You know, so it's just depends upon what they're trying to do, you know, and where they're trying to buy.
Yeah.
All right. Any questions about this line of credit scenario? Any additional questions? Looks like we got another question in the chat.
Great question. We'll talk about the requirements for a reverse mortgage, but owner occupied only. No investment properties allowed on a reverse mortgage.
And just
or second
also to mention, it has to be primary residence.
Yep.
And they have to live in the home for 6 months and 1 day out of the year. So if they have a secondary home that they live in, they can totally do that. They just have to do an occupancy cert, just like you do on a forward mortgage, that this is their primary residence for 6 months and 1 day out of the year. All right.
Mm-hmm.
Okay, so obviously this is a proposition for you guys. What's in it for you? You obviously, we can go both ways, Brooke, but it allows you to continue to sell homes in more challenging of a market, and obviously get in with more of even your past clients. They may be looking to retire or downsize or move to be closer to family, any kind of the scenarios that we were running by earlier. And you want to hit the other ones, Brooke?
Yeah, and just to piggyback on that, you know, in reverse, you're not going to get borrowers that are rate sensitive. In the forward side, everybody wants a 2%, 3%. They're going to, you know, penny pinch you with a quarter here, an eighth here. You know, we see that all the time on the forward side.
Yeah.
Reverse mortgages, because there's no mortgage payment required, you're not going to get a lot of borrowers that are going to be that rate sensitive. And the thing is that we're such a small niche. You're not going to see these like extreme fluctuations of interest rates. So I just want to let you guys know that this challenging market, which we're all feeling because rates are so high, it really shouldn't be an issue for people to buy a home right now for a HECM for purchase in regard to this challenging, you know, raising high rate environment. So I just want to throw that out there.
And note also, these are refinanceable in the future if rates were to drop. Just like we were refinancing during 2021, the same thing, a lot of reverse mortgages were being refinanced during that time with the rates dropped. So just to add that.
Yes, we can refinance.
And they would be refinanced though into a reverse mortgage product.
Yes. It's called basically a HECM to HECM. There has to be a benefit to the borrower or to the client, which would mean basically that they can tap into more of their equity, lower the interest rate, get access to more of the funds that are available with their equity. So,
yeah. And I think as a realtor, you know, I look at this as you have an opportunity to show your clients a home that they actually want versus what they can qualify for on the forward side, right? Because again, on the forward side, you're dealing with DTI issues because of the fixed income. You're dealing with maybe, yes, they have an all cash, they have all cash to put down, but that's still limiting them to the value that they can pay for, right? Or qualify for. So it actually gives you as a realtor an opportunity to show higher valued homes to your client. And again, you know, looking at past clients, if I was a realtor right now, I would go through my database. I would look at all of my clients that were denied because of DTI, because they couldn't afford a home that we were looking at. You know, just any of your declines that are in, you know, from 55 years old to, you know, 55 and older, I would go back and revisit those and sit down with Esther and just say, hey, like this was a DTI issue. Do you think we can, you know, move forward with a reverse?
and it might be something just to open up that conversation to be like, hey, what's your plans for retirement? You know, because a lot of people's thoughts in retirement have changed within the last couple of years because of inflation. So, you know, I've had a lot of clients call me asking, you know, hey, I had this idea. I'm actually going to be moving to Arizona now instead. Because a lot of people with a rising cost of living have changed their mind on where they want to retire and, you know, age in place. So it is a great opportunity for you to, you know, open up that conversation with some of your past clients and future clients. So
I have another question, and this might sound silly, but in the very first slide when you were talking about the, you know, the mortgage for new purchase, whatever, and it says that there's no mortgage payments. What does that mean exactly? They're not making a payment on the
no principal payment. The interest is just taken from the loan, basically, right?
The equity of the home.
Equity of the home. So they do have to continue to maintain the home, pay their taxes, and the home insurance. But there's no mortgage payment required. They can choose, if they want, to make an interest-only payment, whenever they want. They can choose not to. But there's no payment required. So like on a forward mortgage, you're used to getting a piece of paper every month that says this payment is due by the 1st of the following month. That doesn't exist with a reverse mortgage. They send you a statement every single month letting you know how much interest was taken out of the equity of the home and what your balance is. But there's no payment required. Does
So
that
they're
help
literally
explain
just
it?
taking out the 6.8% out of whatever the home is worth every month, and there's no other payment? Wow, okay.
Yep. So it really, really helps to free up somebody when you're talking about somebody really only bringing in $2,000 a month on Social Security income. Now, let me just note, it's not only for people that are on a fixed, smaller income. It also works well for people that are wealthy and because they diversify their assets. And that's a whole nother thing I'm going to be talking about in the future. We'll do another webinar about how to utilize that with like a financial, perspective. But there's a lot of that you can do with financial planners, having those relationships as well. Does that help to answer it?
Do you have just like a real, like an example that you could put on the board to show, okay, they purchased the home for 600,000. This is what they were paying in interest, and 20 years later they died, and this is what's left over for their family members?
Oh, like
Or
an amortization schedule?
An
just
amortization
something so I
schedule.
can kind of, yeah, just something so I can like really, get this ingrained in my mind.
Esther, I can send it to you, and then let's answer I can email it to you, Esther, if you're able to do that.
Yeah.
And then in the meantime, do you want to answer some of those questions in the chat while I'm doing this?
I am trying to get access to the chat.
Multifamily 2 to 4 units, yes, but remember it has to be the primary residence. So yes, we can do 2 to 4.
I don't know why I can't see the chat. Maybe it's because I'm on full screen mode.
Oh, okay. Could we do a double transaction as long as your state allows it? So I don't know, the state specifics, but
And double transaction meaning like sell and buy, or what is that?
I guess we can come back to that one. I think Michael asked that question.
Okay.
Or Ron asked that question.
Oh, here's the chat. I can see it now. Okay. So Michael, real quick, the requirements for refinancing a HECM, they have to meet a HECM to HECM test. So basically there has to be a certain amount of benefit to the borrower, meaning they have more access to equity in their home, like their home's appreciated more in value since they took it out. And maybe they're older and they don't owe as much on the home and rates have decreased. So right now, because of the rates being where they are, there's like a squeeze. Whereas when rates, get lower, maybe next year or the year after, there'll be less of a restriction on the amount of equity that you have access to because rates would be lower. Let's see. Any special requirements for an appraisal on the reverse for purchase? Well, I can just tell you it's an FHA appraisal. So, your normal standard, like in California, the water heater needs to be double strapped, no chipping paint. If you've got like an outdoor patio area, you've got to have handrails. Your typical appraisal type of health and safety issues, really. Anything else you want to add to that, Brooke, on your end?
No, yeah, I mean, I think it's an FHA appraisal. So, they are pretty, they're sticklers on what repairs need to be done. We can do a repair set aside if it's not health and safety. So that's a good thing to note, but it's an FHA appraisal.
Yes. And we, obviously for condos and complexes and stuff like that, I know you've got a lot of that out in Florida, Jennifer. There is FHA approved condos, and then there's also a thing that we can do called a single unit approval, which we've done. So those are options available as well if the condominium complex itself is not approved through FHA.
Yeah.
Can you use this for new construction?
Yes, you can.
Yeah. Okay, I think we answered all of
And
them.
sounds good, Hiram. I see your
Mhm.
co-marketing for sure. Definitely. We'll get together on this.
That's
And-
huge. I mean, a 55 plus community, if you can get into one of those and start marketing and, even, I would recommend, if you can get in and do a presentation, so more of an educational presentation for that 55 community, that would be huge, instead of like just trying to sell the reverse.
Yeah,
but
and I
educate-
can go in there with you as well
Yeah,
to help
that's
answer
huge.
questions.
Yeah.
And what's really cool too is I can do like little illustrations in front with a client, that would kind of give them an idea of what, based upon their age, if they were to purchase this, how much they would need roughly, in order to buy the property with the reverse. And it really only takes me like a couple minutes to do. So it's convenient.
Michael just asked, is it best to wait both to be 55? Actually, both borrowers have to be at least 55. So if
For
you're
the purchase.
if you're going through the proprietary product, both borrowers have to be 55. Now, on a traditional FHA HECM loan, one borrower, if they're married, only one borrower has to be 62. You can have a 62-year-old and a 40-year-old, but we will default to the 40-year-old for the LTV. So we always go off of the age of the youngest borrower, value of home, and current rates. So just so you know, at least one borrower has to be 62 on the traditional HECM product. Great question. Okay.
All right. Okay, so we did talk a little bit about the qualifications, but just real quick to reiterate, obviously there's a down payment percentage required based upon the age of the borrower, of the youngest borrower, the value of the home, and the expected rate. The borrower has to maintain the home. They have to pay their property taxes and their home insurance on the property. And down payment is allowed from an allowable source. They have to meet ongoing loan obligations, which we already covered. It's a primary. Okay. And then the one other thing that is important to note, all of these loans, because seniors are protected class, they require loan counseling. Each borrower has to attend loan counseling, which is super easy. Literally it's a phone appointment, and I have all of the numbers and all that stuff to give to the client in terms of options. They could go in person if they choose to, but most of the time, 9 times out of 10, clients want to do the phone one because it's like 45 minutes, 30 minutes conversation. And then I think Brooke already talked about the borrowers have to be as young as 62 with HECM and a minimum of 55 for the platinum or proprietary reverse jumbo reverse. All right, you want to go over this slide, Brooke?
Yeah, I mean, just, again, reiterating, why a HECM for purchase. We discussed a little bit about more purchase power. So again, instead of putting an all cash offer, they have an opportunity to put maybe 60% down, but that means that they can potentially qualify for a higher priced home. I think just retention, you as a realtor, to be able to give your borrowers more options, that makes you look better. right? I mean, you work with Esther and, you know, I look at the forward side and you guys have so many different lending options. And I think this is just another one that you can add to your toolbox.
And it really will help you stand out from other realtors, because this is something that a lot of people in general don't know much about from a client perspective, but also from an agent perspective. So if you just have a little bit of an understanding, have this in your toolbox, and you know, this can help you definitely get more transactions and help more people. So I think that was one of the questions, was about appraisals. So this is also, Jennifer was asking about new construction. If you wanted to clarify, basically, with new construction, it has to be like 90% or more complete on the report, right, Brooke? So
Yep.
if it's that, then they'll close on it at the time of, it has to be at least 50% at the time of the appraisal.
Right.
It's got to document all of the finishes, and if you guys wanted to take a picture of this, might be helpful. You are allowed to have seller concessions up to 6%. So that's super helpful as well for, you know, to know that a seller can also contribute to some of their closing costs.
So could those concessions also be used towards paying our commission?
Brooke, I
If
think
the seller's not offering a commission? I'm just curious. With
for the new NAR lawsuit that went into effect,
I know. I don't know that answer. I can find that out. I don't know
I'm
that. This
I'm
is a
pretty
new,
sure, but this is a new thing.
this is
Sure.
a new thing. This just came out this year that they're allowing 6% seller concessions. It was not allowed on HECM. So we're kind of like, you know, collecting all of this data and, you know, and trying to filter it out. But I can find that out for you. So if that can be used to pay for the buyer's agent.
Yes.
Okay. All right.
Very good question.
Yeah.
World we live in.
Yeah.
If not now, it will be, I'm sure, soon, because
Sure.
NAR, you know, obviously it's going to change everything. You know, and just to note too, FHA very rarely ever requires a second appraisal, but sometimes it does happen. So I just want you guys to know. It's happened before. Like, I've done a ton of FHA loans, and I've had probably one or two ever needing a second appraisal. So it's very small percent. Okay, so any more questions? Want to open this up to anybody that wants to discuss any type of questions for either Brooke or I, or any other scenarios?
I had a question. So the reason I asked about the new construction multiplex was there was I had a lender, fortunately she passed away, but she was schooled in reverse mortgages, and her retirement plan was to basically um, you know, do a fourplex or something, live in it, you know, downsize into it once it's complete, live in one of the units around the other three for income.
Yep.
But I've also heard it's possible to do that with like a future vacation home. Is that not the case? Was that a misunderstanding?
A reverse mortgage cannot be like, you can't take out a reverse mortgage on a second home. It has to be a primary residence. So for somebody like that, if they have a second home that maybe they purchased, and then they're going to move into that and make it their primary residence, that you would then just change the loan to a reverse mortgage on it after the fact. It wouldn't be for like a purchase unless there are plans were to make it as their primary residence at the time that they're purchasing the property. So it's about the intent at the time.
But you could use a reverse mortgage to purchase like a triplex or a quadruplex, live in one unit, and then
Yes.
use not have a mortgage payment, but then be renting out the other three.
Yep.
That's pretty freaking awesome.
And you can go all the way up to 4 units.
Yeah.
And I've actually have quite a bit of clients that plan to do that in the future. We've also done, just regular reverse refinances on multi-units, working on one right now, actually. So it definitely opens up.
What happens if the person that purchases with a reverse mortgage decides, I don't know, for whatever reason that they want out and they're going to sell the property?
They can do it. There's no prepayment penalty.
Okay.
They can decide that they don't want it anymore. And also, by the way, you're only limited to having one reverse mortgage at a time. But
Okay.
you're not limited to the amount of reverses you could ever have in your lifetime. So I had a client that had a reverse mortgage in Arizona, for instance, and then she decided she didn't want to live at that home anymore because her partner deceased in the home. And she wanted to be closer to her daughter. So she moved to California to be with her daughter at a second home that wasn't her primary when she first purchased it, but it was the second home she had ownership in for a long time. So she ended up doing a reverse mortgage on that new home because she moved there. So she had sold the other home in Arizona, paid off the reverse mortgage lender, took the rest of the equity out, or after everything was paid, right? And then went and moved to her second home, now lives there and has a reverse on her primary home. So.
Okay, but you have to be 55 to do this, right? I'm like already planning my retirement. I'm like,
You have to be at least 55 for the jumbo proprietary one. Most of the time, in my experience, by the way, it makes the most amount of sense for somebody to be 62 because of so many benefits that you get with the FHA, in my opinion. Okay.
Good stuff.
So, I just want you guys all to know that my goal here is to help you also with your marketing on these products because they're very specific, and it's a niche. And you obviously, it's very important as you are as a realtor, as I was saying before, to stand out among all the other people on your social media posts. So my team and I are going to be putting together some social media posts done for you to help you marketing to your clientele as a sphere of a realtor, right? So what it can do is help you have more real estate conversations with either past clients or potential clients on following you on Instagram or Facebook. And that goal is to help you not have to dig to find information and make your own posts. So we're going to make some stuff done for you. I'm going to share with you a link on a QR code in the next couple slides to sign up for future webinars. And then also I will be reaching out to you each individually, with like a one-on-one conversation, anything I can do to help you with your marketing on this. And then also I'm going to be doing some more unique niches that could help you grow in your offerings as a realtor. But each time we do these, I plan on giving you social media posts done for you that you can use. And then also this would be a good one to have to add on to your listing presentation. So we're going to work together within the next couple weeks. I'll have everything available that you can, like if you have a client potentially, like if you're meeting within for a listing presentation, if you've got somebody that that's a little bit older, it might be something just, hey, if you haven't thought about this, here's this, and let them kind of read up on it. And just a heads up, I've written a book on reverse mortgages and I have an entire YouTube series as well. Because it's a very unique offering and a lot of people have a lot of initial questions. And most of the time it's because they don't have answers to questions that they have. So they need a little bit of like a 411 and I've created that for them. So let me just go to this next here. So if you're not already connected with me on social media, here's all my social media landing pages. And I do a lot of informational stuff, but if you follow me, I'll follow you. Right. All right, so this is the QR code. This will take you to the landing page to sign up for future webinars. And also I will put, if you sign up for this, then I'll send you all of the social media posts as well, to use for, your social media about reverse mortgage for purchase.
I can't get it to work.
Okay, maybe I'm in the way. Let me see. Let me exit this full screen.
There we go. I think I just got
Is it
it.
working now?
I got it. Thank you.
Awesome. Okay. All right. All right. And just while I'm thinking of it too, there's a lot of potential that you can do to reach out locally, by the way, to, think of like local Facebook groups for you to get in touch with more seniors, or listing opportunities where you're meeting with somebody. Next door is a great place. I would just try to set yourself apart as a realtor with whatever you're doing with marketing wise. It's important, for reverse for purchase to keep that in mind. Obviously, like going to like a 55 and up community, doing a presentation, anything that you're looking to expand, for the senior citizens, this is a great way to open up that, communication to get more of your listings. And also local financial planners is a great tool as well. Having those relationships, because not only could you help clients maybe refer them to a financial planner, but you can also create a relationship with local financial planners to be their go-to source as well for their clients in case they're looking at potential reverse mortgage for purchase, or to help their clients that are looking to buy or sell or downsize. I have financial planner relationships here locally, and I'm expanding outward where I help to train them as well on this product, because it helps a lot of people to diversify their entire retirement portfolio and elongate it. So anyway, that is it, guys. I just appreciate everybody being here. Many of you probably already have my contact information, but just in case, this is my email, my website, and my phone number. And, just stand out and be different. And I look forward to helping you guys all grow. Thank you so much, Brooke, for being here with me today and co-hosting this with me. Appreciate everybody. You want to say bye?
Thank you.
Awesome.
Thank you so much.
Yeah, thank you.
You're very welcome. Let me know if you guys have any questions at all. You've got my number. I'd be more than happy, and I'll be reaching out to each one of you individually as well. So have a great
Thanks,
day.
Esther. Have a good day,
Okay.
guys.
All right,
Bye.
thank you. Bye.